Hi everyone and welcome to this webinar. Hello, how are you? I do believe everything's fine. The sound is okay, right? So we can start. Sorry for the small delay. My dad was ringing at the door just when the administrators tell me to start the webinar. So anyway, the idea today is talk about a bit about backtesting, right? And how to test and understand the trading systems we are applying. It's not about trading systems. I believe that most of this forex trading, it does not depend on the indicators we choose to work with, but mostly depends on the confidence we have in the systems we have chosen. And that confidence will come only through this kind of backtesting, any kind of backtesting, but backtest at the end, okay? Anyway, I will place a chart, okay, and reduce the window a bit. I know this is the worst part of the forex education we need to pass through, the hard work of testing a trading system. But see, as I was saying, this testing is learning. It's understanding the previous behavior of a certain pair, right, in order to be able to forecast the future probabilities. And it's really useful because it helps us to classify trading techniques, giving us the opportunity of belief in a system of discarded for good, right? Sometimes certain systems does not work with certain pairs, and some systems, for example, work better for high volatility pairs, another one better for the ones that move in a short, small intraday range. So it's all about being patient at this part of the career, let's say, okay? As you surely know, all indicators and oscillators are based in mathematical formulas, right? So math is the base of all technical trading. Following this concept, okay, backtesting using historical data is the most efficient way to find out the system performance, at least in the past, based on statistics, right? And believe it or not, statistics is the foundation stone of any profitable system. It's good to add here that backtesting involves testing a system using a set of historical data, right? And we are talking always about probabilities. It's easy to see the historical performance of a certain indicator, but there are certain differences when we are trading leads, right? We are going to talk about this later on. So how do we start trading backtesting? How do we start? First of all, we have to choose a trading system that needs to include at least one or two indicators. I said that more than two indicators, oscillators, or whatever you want to call them, it's a bit more complicated, and usually a two indicators one works for us. In this case, as you can see, I choose just for this webinar, Bollinger Bands, simple Bollinger Bands, and relative strength index. I only modified the levels that came by default to 80 and 20. Okay, I found it a bit more reliable than 30 and 70 to talk about oversold or overbought areas in a certain cross, right? So first of all, I choose the indicators I want to trade. A trading system can be as simple or as complex as you can imagine, right? From a moving average crossover to one consisting of several highly evolved indicators. However, as simple as better, at least for me. Okay, if we have to coordinate 5 or 6 indicators and wait for the 6th to align to finally take a trade, okay, I will take a trade once a month, right? So despite there are systems that are perfectly good and 99% profitable with that kind of characteristics, right? We need a wide capital to trade once a month, right? And be profitable along the year, right? So it's not the most recommended one, at least for me. Of course, one thing I want to add is that there's not just these two, okay? You can add a Fibonacci, a trend line. There are certain tools you can add to your stack to confirm, but try to be simple and add not too much information. I don't know, maybe at this time we can add an ascendant trend line to this one, or if we see that the pair starts forming a Fibonacci retracement to see a probable target area, right? But that's the idea. Once you have the systems, Okay, we have to define in which time frame we are going to apply it. In this particular case, I choose the 4-hour time frame. Of course, believe it or not, it has some profitable results, but variate in different time frames, right? It's not just that for the euro dollar, this Bollinger Band relative strength index combination will be always equal as profitable in any time frame. If I'm going to test it in 4-hour charts, for intraday trading, in 1-hour chart for shorter even trading, or in the daily chart for long time trading, in each particular case, I have to perform its own back testing, right, of this particular system, because that varies. Third, we have to define the rules of the system, okay? When I'm going to get in the market, when I'm going to place my stop, where I'm going to place my limits, why I'm going to enter the market. In this particular case, I have said that I tend to use this system using Bollinger Bands and relative strength index to try to find either bottom or top and try to catch a correction movement. Okay, so I say that when the pair breaks, the price breaks, for example, in this case, outside the Bollinger Bands and then open the next candle, this particular one, inside the Bollinger Bands, that should be ready to correct. Okay, how do I filter that? Because that's the idea of using two indicators, one giving me signal, the other one filtering the signal, right? That's the base of combining two indicators. The filter will be the relative strength index. If at the moment the pair reach this area, price is over both, then I will be happily selling around that levels, right? On the contrary, if we reach the bands, but price, like in this case, the price reached the band, but relative strength index is mostly flat and far from overbought conditions, I won't be selling the movement. Okay, that's the idea. Same in here, right? If we reach the bottom and the price is oversold, then I could try to catch an upside corrective movement, right? But I will move a bit the chart. You will find several examples, right? The price overcomes, open candle inside, it was in oversold conditions, then yeah, well, that's the chance I'm going to take with this particular one. Okay, that's the idea. So I defined my rules. Where I'm going to place my limit order and my stop loss with this particular system. Okay, usually I will say that once the price, right, breaks above, I don't know, maybe this high, previous high, right? I would take into consideration how many pips it is from the entry point. I say that the price breaks above this high, I will place myself, I don't know, maybe 10 pips above that, right, plus spread. For example, okay, I have to decide it. Another way to decide it comes from backtesting, and we are going to discuss it now, okay? And regarding the limit, the same. Where do I going to place my limit? The fact is that when we trade Bollinger Bands, the rules of Bollinger Bands says that the limit will be the medium line, right? The one in the middle, the black line. But when I enter the market at this particular point, right, when the candle opens inside the Bollinger Band, the middle line is around 130.90, right? And the price never reaches, because as price continues moving, the moving average to the simple 20 moving average, the central line, moves also. So where should I place my limit, right? I should follow the trade, or I should look for a fixed number of pips. That, of course, depends on us. I'm giving you just the ideas of how we set the limit and we set the stop loss. In fact, if you take a look, that also will come from backtesting. We have a 90 pips, 100 pips gain in this one. Okay, so maybe for our charts, a 100 pips profit is quite accurate, right? But of course, that depends. And we are going to see how we can set it also with the backtest, right? Now, finally, we have to backtest it, right, in order to validate the past data and see how the price behaved in the past and see what we can do with that information to forecast future, okay? And the most important thing we need to do is, of course, an historical database, because the process of backtesting involves running the system over historical data. We need historical charts. I would like to say that at least you can update your charts. There's a system. I will place the link to the fxread.com document about how to update your charts. But these days, MetaTraders, most brokers have their charts up to date, so you have plenty of historical data to review, okay? The most important thing we need is of course, that historical database. So let's start with some practical examples of backtesting, right? Before starting, one other thing. I believe that the main and the principal instances, the most important things of doing a backtesting, okay, is because charts variate, right? Every broker, every different platform offers different prices at different moments. They have different spreads, so you are going to see a bit of a different price, and you have the different time zones. I have plotted the system in another MetaTrader, right? We are going to show you that. Yeah, I guess you have seen that this candle, the first one opening inside the Bollinger Band, in this particular case, opened at 33.25, right? Let me change the MetaTrader. I will refresh the camera. Okay. Here we are. Okay. And if you see, candles are not equal. This one is green to be more easy to notice, right? The candle opened around 33.47, 22 pips higher than the previous one. So my stop will variate, my profit will probably variate, right? And it's the same time of the day, or around the same signal, the same price, the same movement, with the difference that the candle opened a bit earlier or a bit later, and we have a 22 pips difference price opening, okay? So that's why it's so important to do the backtest, right? We need to understand the behavior of the charts we are trading, right? I don't care about any other chart but the one I'm trading. I don't care if, I don't know, in the X broker, the price open at here, or the day close at 6 GMT or 22 GMT. I don't care about where other brokers or other closes are set. The ones I do have to care of is the ones I'm trading, right? Because if I'm trading this chart, I will be getting into the market around 33.47. And if I'm trading this one, I will get into the market around 33.25, right? That's the difference. Okay. Anyway, that's what I'm just for show. Okay, I will close the one at 33.47 because it's not the one I'm using. Okay, we have a couple of questions. Chuck says, sorry, but what are the Bollinger Bands? Okay, Bollinger Bands is an indicator, right? Based on a simple 20 simple moving average. There's one in the middle, right? And it has two standard deviations that can also be modified. This is a common setting. We said that once the pair reach the highest span, the pair could start a downside corrective movement towards the midline. When it breaks the midline, should approach to the opposite one, and the same in this case, right? It's not just as simple. As you can see, when a trend starts developing, the Bollinger Bands start extending to the downside with price. So once we reach it, there was no bullish corrective movement. And that's why I added the relative strength index as filter, because that's a better way to determine bottom or top, okay? We will talk about them. And Gianna says, I made a strategy last summer, backtested from 2000, almost started to trade, but it crashes on the next 3 weeks. Yeah, September. Now it's hard to believe in backtesting. Well, I was going to add this in the upcoming comments, right? Once you have set your backtesting, and we are going to see how did you do it, and it can help you a bit more, you have to start trading it live, because I believe that one thing is seeing what happened in the charts in the past, and another thing completely different is seeing it happen and live and taking decisions, right? At the end, it all depends on us, and us pushing the bottom and entering the trade at the right time. Timing has a lot to do also with markets, okay? Chuck says, what indicators are pointing north for euro for continuing rally? Chuck, you mean labor market analysis? Sorry. I don't think so at this particular moment, okay? Anyway, let's go back to I do believe that market will be waiting first for housing reports right now, and later on for further decisions. But since I was very exhausted, I'm still below that 37, 35 area, right? Anyway, I get lost. Okay, I know what I was saying. I was about to say. I was saying that the entry point is different, so that's the importance of doing your own back testing. Okay. So give me a second. I will refresh the camera. I will show you how do I start back testing. Okay. When I start doing my back testing, I start using this. Okay, a simple Excel sheet. Okay, where I added the pair I was going to trade, the system I was going to use, and the time frame I had chose. Okay, frame is bad, bad written. Sorry. Anyway, that's just the things I take a look at, right? So, what I did when I start backtesting manually, right? I did it all manually. I set the date and the time. Why do I set the date and the time the pair or the system give me a particular signal? Because if I have the date and the time, mostly the time, right, I will be able to filter whether the system is more profitable in a certain session, in a certain time of the day. If it works in Europe, but it works in Asia, right? That's why I added the time of day the system performs. Or maybe I could see when the system gives more signals, okay, to get into the market, because I don't know, when we backtest any kind of strategy, right? We backtest 24/7, and the fact is that we are not in front of our screens 24/7, right? We can't do that. So this time will filter for me the times of the day the pair tends to give a signal, right? And if it's positive or negative, right? And I will be able to see, well, I can trade with this because during my trading hours, I have a good number of profitable signals, okay? And the date, I use the date because I want to see how many signals a day, a week, a month I have in a certain system, right? I will find a system that is 99% profitable, as I told you, but if it gives me just one signal a month, well, then that's not really interesting for me, okay? For me, maybe it could be interesting for you, but you need that kind of information, right? So let's say that we have this Bollinger Band signal, okay, and I would say that I will be selling, okay, so I mark that it's a sell, okay, around 132, what was the price? I don't remember exactly, 33.25, okay? I will be selling around 33.25, right? Okay, that will be my entry point, right? I need to know what's the maximum loss is loss. Sorry. Okay, let's start to see the formula in it. Okay, there we are. So I want to know what was the maximum drawdown I had once I get into the 33.25. Okay, so I will go back to my chart and I see that the pair rose 136 pips. Okay, sorry. Let's go again. Okay, after my entry point, the pair rose 135 pips. Sorry, I know this is a bit disturbing. So I would say that my maximum loss in this particular trade has been 136 pips, right? And my maximum profit has been 100. Let's say a number, okay? It's just an example. Okay, I usually also take into account how many candles the price take to reach the target I set, or the benefit, or turn positive, or whatever you want to like, the maximum profit, okay? If it takes one candle or 100, it also makes a difference, because we say that usually price should not take more than 5 candles, right? 5 candles is the perfect number, not more than 5 candles to accomplish the target, okay? If it takes more than 5, well, I don't consider that profitable. Signals can change, market can change. Mostly in a 4-hour chart, we are talking about the complete day, so market could change completely. So if around 5 candles, the system has not given me a profitable signal, I will be considering getting out of the trade after those 5 candles. In the state it is, with winnings, with losings, I don't care. As it is, I will close my trade. Okay. Anyway, I was saying the maximum losses has been 136 in this particular case. Okay. So I will keep on looking backwards, right? all the time, every time I have a signal, and I will keep on registering in here, right? And I will find a lot of numbers that could be from 1 to 100. They show you we can have 5 pips profit, I don't know, 30 drawdown, maximum win, sorry, 30, and drawdown 5, and continue with that. I don't know, maybe a drawdown of 250 or a profit of 300, right? So what do I do with this data? Okay, what do I do with this data? I tend to discard the ones that are way too weird, right? The 250 or the 300 are usually triggered by fundamental data, okay? So those ones will not enter in any of my average calculation. I will show you what calculations I'm talking about in a few seconds, okay? I will leave those numbers aside for my average calculation, okay? Because they are weird and they don't happen all the day. It happens once and there. It's pretty weird to see such huge amount of pips in a 4-hour chart being moved by any cross, right? It could happen, but it's weird. So for my calculations, these numbers are over, right? So then I will keep on following this list. What I can do, I can do two different things with this kind of information, right? I could make an average of the pips win per trade, right? And let's say I make an average of these 326 divided by 7. That will give me 25 pips or so. So I will set my limit target in 25. That's an average, okay? An average of the maximum win the pair tends to give. But the fact is that seems a bit poor, 25, right? So what could I see? I could see also that I don't know, as an example, always as an example, okay, the less I can ask for this trade, let's say, let's change a bit the numbers, okay, 43 and 52. I could say that this particular system, okay, the minimum profit seems to be 43, okay? So I could say that to guarantee myself some winning, I will set my limit in 43, okay? Let's change this one too so you don't get confused, okay? Okay. 43 is the minimum profits I get with this trade, the minimum. So that will be my limit. Could seem a bit conservative, but seems pretty simple. And we are avoiding a lot of calculations, right? If that number is good, that will be great. So, I will be getting 43 pips for sure for every trade. Of course, always remember to these values as a spread, right? The spread in your own platform, 23 plus spread or less spread, whatever. Always remember that when you're going to set either your limits or your stop loss, okay? Then I will take a look at maximum drawdown the pair has gained, okay? What do I see in here? Average, I lose 30 pips before the pair starts. I have a maximum drawdown of 30 pips, okay, average again, okay, and then the pair turns into an extreme. We catch down from 40 to 100, right? So when again, I can make a choose in here. I could say I would close my stop around the 30 pips. That's the average, okay, or I will place it a couple of pips above the highest one, in this case 46, discarding the weirdest one, okay? So my maximum drawdown will be 48, 47, okay, plus spread, and that's it. There's going to be where I'm going to place my stop loss, right? This, of course, we have 10 imaginary lines in this particular sheet, okay, just 10, but that's the idea. When you start to adding more and more data to this particular sheet calculation, okay, you will find out that there is an average, okay, you can use. You will see that the prices tend to respect the behavior, okay? Another thing that seems important to remark right now is that ideally, whatever you backtest the system, you need to use as much data as you can, right? In order to cover all the probable different market phases or conditions as possible. Okay, market's not always the same. We have times of choppy trading, we have times of consolidation, we have certain trends, We have strong trends, we have weak trends. So as much data you cover from the past, more of these market conditions you will cover, right? So considering cycles and slowdowns and sideways markets, they would say, and of course fundamental news that can distort all the previous data. The idea is that as more data we backtest, the more complete will be our picture for getting better backtesting results, right? I believe a good idea is backtest the system at least the last 200 times the system gives a signal, okay? Not 200 candles, 200 signals, right? The last 200 signals, that will be my basis to start. And compare the percentage I get from that 200 trades, okay? Let's compare the first half, the first 100 half with the second 100 half. Why? Because market tends to evolve. So latest data will probably weigh more than earlier one, okay? So if, for example, I don't know, I test the system and at the end I come that is 74% profitable, right? And I found out that in the first 100 trades it was 90% profitable, but in the last 100 trades, it was just 55% profitable. That's not good trade, a good system. Okay. On the contrary, if the total, okay, I don't know, maybe an 80%, but in the first half it's 77 and in the second it's 82, then I closer to the average, and that system will probably continue being profitable. Okay. But remember, we have to continue comparing this, right? I can't do a backtesting, okay, and sit a couple of years trusting in that backtesting, right? I usually update my backtesting every, 3 months, 4 months, not much more than that, okay? With some strategies I have, I almost do it monthly, okay? I update the data monthly. Once you organize your sheets and your paperwork, and your work papers, you will find out pretty easy, and adding just 1 month data will be even more easy, and you will have a complete picture, okay? Anyway, of course, after the backtesting is complete, right? I guess that the best advice I could ever give to anyone is don't jump to trade it in live, right? Start trading it in a demo account, okay? Because that's the moment when I say that the user action is required, right? That's something we forgot in the discussions of trading system strategies. The fact that also they're mechanical in their generation, right? Because manual signs, buying or selling signals should be executed by us, okay? So the real performance of the system is contingent on whether we execute each trade when we are supposed to. When we made backtesting, we consider, as I was saying, 24 hours, 5 days a week. But the truth is that we're not always in front of the computer that long waiting for this stuff, right? That's why the time filter is so important. And following the system in real time involves lots of time in front of the computer. So it could be a good idea to filter that backtest once it's complete with our actual trading hours and consider the behavior of the pair and the study in that time of the day, what I was saying earlier. Anyway, with this sheet, okay, I will come to a certain number of averages of numbers I could found as usual information, right? This is what I call the optimal answer. This is the question I made to myself when I finish my backtesting, okay? How many winning trades I have expressed in pips, right? I have how many loss trades I have expressed in pips. Do I win 1,000 and lose 300? Okay, that's good. Do I win 300 and lose 1,000? Okay, that's bad, right? Just that first 2 lines will be more than enough to tell me if the system is good or not. Okay, I could add anything I like in here. Okay, but what I usually do also take a lot of care of is the maximum consecutive losses the pair has. Okay, or the maximum consecutive winnings. Right. The maximum consecutive losses are important because when you have a trading system, you test it. And it's good, and you get into a market and fail, you get in the market and fail, and you get in the market and fail, fails 3 times in a row, and 99% of the trader will probably discard that system. 99% of the trader will say, this is no good, and poof, go away. But the fact is that if I know in advance that the system could give me, I don't know, 4 bad trades in a row, 4 is the maximum the system has gave in the last 200 signals it did, right? I won't discard the systems after it gave me 3 negatives because it's inside my average, it's inside what I have considered, so I won't be scared, okay? I will be scared if the system gives me 6 in a row because something is wrong, okay? My number is 4. Out to 4, I'm okay, right? A 5, well, it could be 1, okay, but 6 1 should be positive. But if you give me 6, then I should review all my system. There's something I have done wrong, or the market conditions have changed way too much, okay? But confidence. Build up your confidence. This is up to only just for that, building up our self-confidence, okay? Of course, maximum consecutive winnings in precedent in money or in pips will be also useful. And the percentage of winning against losing trades, right? That will tell me if the system is profitable or not. I do say that above 70%, any system will be profitable if the stop loss is accordingly to the limit order, okay? Okay, and the average pips trade per trade win and per trade loss is what I was saying, where it will help me to set where I will place my limit or my stop loss. If I'm a bit conservative, I will choose the minimum of both columns and I will be okay, okay? And finally, the non-return point, okay? The non-return point is, as I was saying, the 100 in this particular example. Because once it hits 100, it will jump to 136, 250, or maybe even lower, the 46, because from 46, I know it will jump to numbers above 100, right? So I know that above 46, price will not come back, okay? And I won't be winning a cent. So that's where I place my ultimate stops. If I'm a bit more risk lover and less conservative, okay? Anyway, do you have any questions? White cam, sorry. Long time with white cam? Okay, like 10 minutes. Have you seen the sheet, or have I been talking with nothing? Okay, don't tell me it was white. Anyway, those are the links I was trying to post for you. The educational learning center, Unit 3, Chapter 2 in Episode 3 has a lot about backtesting. And I don't want to end the webinar without telling you that there are a lot of mechanical backtesting systems, okay? Those mechanical backtesting systems, I will give you the freedom of not doing all this work, okay? I have been doing it here. Of course, it's a very long work, okay? Most of them are paid. I do believe that the Forex Tester is one of the best ones we have around right now. But the fact is that I'm convinced that doing this by hand, by yourself, by watching your charts day after day, okay, will give you enough confidence to trade the strategy, right? Okay. Anyway, do you have any questions or comments? I will remove charts right now. Okay, I will give you a couple of seconds to post any kind of questions or comments you have about this one. If not, I'm going to leave you and see you back tonight. Okay, no questions, no comments? No? What's so much silence? Okay then, I will tell the administrator we are going to finish the webinar. Gianni, comment my story. What story, Gianni? I'm not sure. What you said about your trading strategy and you that you find hard to believe in backtesting. Okay, that you mean? That's what you mean? Okay. From 2007, we'll start trading strategy on next 3 weeks. Yeah. Well, I would like to know how the strategy worked. Okay, and where do you apply it? In fact, I'm pretty much interested in about that and your story. Okay, I want to know all the systems. It's crashed. Why? The market changed it when? Okay, when did it crash it? Okay, thank you. And regarding Gianna on the weekly euro dollar, okay, it crashed it in the next 3 weeks. Okay, but after those 3 weeks, did the system continue working? Okay, or was that just 3 negative weeks? That's why it's so important to consider how many trades in a row you have negative. I want to have a lot of more information on that. But when no, that's I would like to study your case. So if you want to leave me a message in the blog, oh, you stopped to look, right? That's what I'm saying. We should not stop to look, okay? That happens. Some things happen. But she should not have stopped to look at it. Okay? Anyway, if you want to leave me a mail your mail in the blog and tell me more about that, we can talk about it a bit more. Anyway, thanks all for being here. I have to go, really. As always, my pleasure. And see you back tonight around 22:30, okay? In the live coverage. Jack, I would say that I will be waiting for the next upcoming data in America, okay? But euro seems unable to reach that area in the short term, but it remains bullish, right? The 20 simple moving average in the broad chart is around 36.20. Only below that level, euro could turn a bit more bearish, okay? And Jen, I mean in this 3 weeks drawdown higher than ever, okay? Well, that's why stop losses are 4, Gianna. Okay? How many negative trades you have in the middle. Anyway, bye-bye all, and thanks for being here, okay? See you soon, guys.